While most investors are still looking at where NIO stock traded 5 years ago, something much more important is happening today. New factory data shows that one of NIO's fastest-growing businesses is accelerating at an incredible 271% year-over-year growth rate, while the company quietly rolls out a loyalty strategy designed to keep customers inside the NIO ecosystem for years. At the same time, the stock remains nearly 89% below its 5-year peak, creating one of the biggest disconnects between operational growth and market valuation we've seen all year. So the big question is this: is Wall Street still looking in the rearview mirror while NIO quietly builds its next growth engine? Today we're breaking down the hidden customer retention strategy, the explosive Firefly growth numbers, and why some investors believe the current valuation could be setting up for a major re-rating. And if you enjoy uncovering the market-moving stories that Wall Street often overlooks, make sure you're subscribed to the Daily Squeeze. Every day we break down the biggest catalysts, institutional moves, and hidden data before they become mainstream. Now let's get into it. The biggest story isn't about deliveries. It isn't about another price cut. And it isn't even about another analyst upgrade. Instead, it's about something that could prove even more valuable over the long term. Customer loyalty. According to newly released company documents surrounding the nationwide rollout of the new 5-seat ES8, NIO has launched one of the most aggressive customer retention programs we've seen in the premium EV industry. Here's how it works. Returning Founders Edition owners can receive up to 30,000 loyalty points when purchasing the new ES8. Standard NIO owners can qualify for 20,000 points. Even owners of ONVO and Firefly vehicles are being offered 10,000 points if they decide to move into NIO's premium lineup. At first glance, this might just look like another promotional campaign. But look a little deeper, and the strategy becomes much more interesting. Instead of constantly spending money to attract completely new customers, NIO is trying to keep existing customers inside its ecosystem. Think about companies like Apple. Once customers own an iPhone, many eventually buy an Apple Watch, AirPods, an iPad, or a MacBook. Every additional product strengthens customer loyalty. NIO appears to be building a similar strategy for electric vehicles. Someone might begin with a Firefly, move up to an ONVO, then eventually purchase a premium NIO flagship vehicle. Instead of losing customers as their needs change, the company wants them to remain inside its own ecosystem. That's incredibly valuable, because keeping an existing customer is usually much cheaper than acquiring a brand new one. And higher customer retention often leads to more stable long-term revenue. That's exactly what long-term investors like to see. But while Wall Street is focused on premium vehicles, another part of the company is quietly growing even faster. Firefly. According to updated operational data, Firefly is now approaching its 70,000th cumulative vehicle delivery, much earlier than analysts originally expected. Even more impressive, the brand delivered 29,172 vehicles during the first half of 2026 alone. That represents an astonishing 271.9% increase compared to the same period last year. Those aren't just good growth numbers. They're among the fastest expansion rates anywhere in the EV industry. Why does that matter? Because volume creates efficiency. The more vehicles a company produces, the more manufacturing costs can be spread across each unit. Factories become more efficient, supply chains improve, production costs gradually decline. That becomes especially important after CEO William Li recently warned investors about higher memory chip prices and rising raw material costs affecting premium vehicles. If Firefly continues scaling at this pace, it could help offset some of those cost pressures by increasing manufacturing efficiency across the broader company. In other words, one brand helps strengthen another. That's exactly why NIO's multi-brand strategy has become such an important part of its long-term story. Instead of relying entirely on one premium lineup, the company now has multiple growth engines targeting completely different customer groups: premium buyers, family buyers, and entry-level EV customers. Each one supports the broader ecosystem. But here's where things become really interesting. Despite all of this operational progress, the stock is still trading at levels that reflect years of investor disappointment. Updated institutional market data shows NIO remains approximately 89% below its 5-year peak valuation. Now, that statistic can be viewed in two completely different ways. Bears argue it proves the market has lost confidence. Bulls argue it means expectations have already been reset to extremely low levels. Because when expectations become that depressed, companies don't necessarily need perfect results to move higher. They simply need results that are better than investors expected. That's where many institutional investors begin looking for potential opportunities. Some quantitative models suggest that after such a prolonged decline, downside risk becomes more limited if the underlying business starts improving. Of course, that doesn't guarantee the stock immediately rebounds. Markets don't work that way. But it does mean future earnings, delivery numbers, and cash flow improvements could have a much larger impact than they would during periods of high optimism. That's why the next few quarters could be incredibly important. If Firefly continues expanding, if customer retention improves through the new loyalty program, and if premium ES8 demand remains strong, NIO could begin proving that its multi-brand strategy is finally producing the operating leverage management has been talking about for years. Investors will also continue watching profitability very closely. The company still needs to demonstrate that higher production volumes can eventually translate into stronger margins and sustainable positive free cash flow. Those are the numbers that ultimately matter most. But today's update shows something many investors may have overlooked. NIO isn't simply trying to sell more cars. It's trying to build an entire customer ecosystem where buyers continue upgrading from one NIO brand to another instead of leaving for competitors. If that strategy succeeds, it could become one of the company's biggest competitive advantages over the next several years. Now I want to hear from you. Do you think NIO's new loyalty program and rapidly growing Firefly brand could become major long-term growth drivers? Or do you believe investors should stay focused on profitability before getting too excited? Let me know your thoughts down in the comments. If you enjoyed today's breakdown, don't forget to like the video, subscribe to the Daily Squeeze, and turn on notifications so you never miss the next market-moving update. Thanks for watching, and I'll see you in the next one.